Hey folks, I hope you're doing fine. I'm Simo from Investment Research, and today is November 10th, and I need to talk about what's happening with SoFi Technologies right now because the stock is having a Monster Monday session. From what I've been tracking in my notebook here, SoFi is at $29.98 intraday, up 6.26%. After opening at $29.06 and hitting a low of $28.84 earlier in the session. When I look at that kind of price action, a 4.5% intraday swing from low to high, that tells me something important is happening. So let's do the analysis of where SoFi stands today, what's driving this volatility, and whether this stock makes sense at current levels around $30. Alright, so the first thing I need to address is the wild volatility we've been witnessing. From my research into today's trading, SoFi opened higher but has rallied further, gaining 6.26% from $28.21 to $29.98 so far. During the session, the stock fluctuated 4.54% from that day low at $28.84 to a day high of $30.15. Now, according to what I've been studying in my technical analysis, this kind of volatility is normal for SoFi with its beta of 1.94. But what's interesting from my view is that volume is at 30 million shares so far, below the average of 71 million despite the price gain. In my experience analyzing stocks, when volume is lower on rising prices, that creates divergence and can be an early warning about possible changes. But here's what I've noted in my analysis that's important. The stock lies in the lower part of a wide and strong rising trend in the short term. From what I've been watching, SoFi has risen in 6 of the last 10 days, though it's still down 0.98% over the past month. Moreover, according to my calculations, the price has gained 6.26% so far today, which suggests buyers stepped in at support. Now, let me walk you through what I'm seeing from a technical perspective, because this is crucial for understanding where the stock might go next. From my research into the chart patterns, several analysts on TradingView are highlighting a breaking SoFi surges. Key levels signal breakout opportunity. Setup. The current price around $29.98 according to some sources, with targets at T1 equals $32.50 and T2 equals $35. Stop levels are at S1 equals $28.50 and S2 equals $27.50. What I've been studying in my notebook is that SoFi rebounded perfectly at the EMA 50, confirming it as a strong dynamic support zone. Moreover, according to technical analysts, the stock is showing a classic cup and handle pattern. This is one of the strongest bullish continuation signals in technical analysis. From what I understand, SoFi pushed through years of long-term resistance with surging volume, then consolidated neatly at highs forming the handle. According to my assessment, if this pattern plays out, we could see a move back toward the all-time high of $32.56 and potentially beyond. However, I need to be honest about the technical warnings I'm seeing. A sell signal was issued from a pivot top point on Tuesday, October 28, 2025, and so far the stock has fallen 13.4% from that peak. According to the technical analysis, further fall was indicated until a new bottom pivot is found. From what I've been watching, SoFi finds support from accumulated volume at $28.14, and this level may hold a buying opportunity as an upward reaction can be expected when the support is tested. The fundamental business that everyone's missing. Now, what frustrates me when I look at the market's reaction to SoFi is that short-term traders are focused on daily price swings while completely missing the fundamental transformation happening in this business. Let me walk you through what I've been studying about the actual company performance, because this is what really matters for long-term investors. From my analysis of Q3 2025 results, SoFi reported absolutely explosive numbers. The company added a record 905,000 new members in Q3, bringing total membership to 12.6 million. What I've noted in my research is that this represents 35% year-over-year growth and actually an acceleration from prior quarters. Moreover, they added 1.4 million new products, reaching 18.6 million total products, up 36% year-over-year. The cross-buy rate hit 40%, the highest since 2022, which from my view demonstrates that SoFi's one-stop-shop strategy is working brilliantly. The financial metrics I've been crunching show adjusted net revenue hit $962 million, up 38% year-over-year, crushing analyst estimates. Adjusted EPS came in at 11 cents versus consensus of 8 cents, a massive 37.5% beat. Net income was $139 million with a 14% margin, marking the fourth consecutive quarter of GAAP profitability. You know, according to my years doing equity research, when you see a company consistently beating estimates by this magnitude, that tells me something special is happening. What really caught my attention from my analysis is the revenue mix transformation. Fee-based revenue hit a record $409 million, up 50% year-over-year, now representing 43% of total adjusted net revenue. From what I've been studying, this shift away from capital-intensive lending toward capital-light fee-based revenue is exactly what institutional investors want to see. Moreover, operating margins improved to 15.4% from 9.2% a year ago, demonstrating the operating leverage in the business model as it scales. Okay, now let me talk about something that's been getting a lot of attention in my research. According to the Motley Fool's analysis published on October 30th, 2025, they're making an extremely bold call. From what I've been reading, they believe SoFi could be a $100 stock within 5 years if management continues to execute. You know, that's a 3.3x return from current levels, which would be an absolute home run for investors. According to their analyst Matt Frankel's assessment, the business has excellent growth momentum and some big opportunities ahead of it. If management continues to execute, SoFi could be a $100 stock within 5 years. Now, from my research into their thesis, they're highlighting several key drivers. The loan platform business is exploding, nearly quadrupling volume from Q2 to Q3. The home loan business is growing 93% year over year and could accelerate dramatically if mortgage rates fall as expected in 2026. Moreover, according to what I've been studying, SoFi is positioned to benefit from potential privatization of federal student loans, where they're one of the few companies with the technical capabilities to service those loans at scale. From my humble view, while $100 might sound aggressive, what I've noted is that SoFi's stated goal is to become a top 10 US financial institution. According to my calculations, if they can continue adding members at current rates and expanding margins, the math actually works. The company would need to roughly triple or quadruple revenue over 5 years, which at their current 35 to 40% growth rate is achievable. Moreover, with margin expansion from fee-based revenue growth, the earnings power could justify a much higher stock price. Again, let me walk you through the latest analyst activity because this gives us insight into how institutional investors are viewing the stock. From what I've been tracking, multiple major firms raised price targets following the Q3 earnings beat. According to my notes, Mizuho raised their target to $38 from $31, maintaining a buy rating. Needham raised to $36 from $29, also a buy. Goldman Sachs raised to $27 from $24 but maintained hold. UBS raised to $27.50 from $20.50. Citigroup issued $37 on October 29th, 2025. You know, when I see this kind of coordinated upward revision, that tells me the street is taking notice. However, I need to be transparent about the mixed signals. According to what I've been reading from TipRanks, Bank of America Securities reaffirmed their sell rating on November 3rd. Moreover, headlines from November 7th and 8th show SoFi stock tumbles. What's behind the drop? and SoFi stock sees pullback after a stellar rally. From my assessment, this tells me the analyst community is divided, with bulls seeing massive upside and bears worried about valuation and execution risk. Something interesting I've been tracking is Cathie Wood's ARK Invest activity. And according to reporting from November 4th, Wood was pouring $17 million into biotech stocks and trimming tech favorites. From what I understand, SoFi was among the positions being trimmed after the massive rally. You know, when a high-profile investor like Cathie Wood takes profits, that can create near-term selling pressure as momentum traders follow suit. However, from my view, this is profit-taking behavior after a huge run, not a fundamental concern about the business. Very important info, my valuation work, because this is where we determine if SoFi is actually undervalued or overvalued at current levels around $30. From my calculations, SoFi trades at a market cap of approximately $36 billion with trailing 12-month revenue of roughly $3.5 billion. That puts the price-to-sales ratio at about 10.3 times. You know, for a company growing revenue at 36 to 38% with expanding profitability, that's not outrageously expensive in my view. According to various forecasting models I've been studying, the projections are all over the map. CoinCodex suggests SoFi could trade between $23.17 and $30.31 in late 2025, while other more aggressive models from CoinPrice Forecast show targets as high as $41 by year-end 2025. From my research, the predicted fair opening price on November 10th was $27.37. But it opened at $29.06, representing a stronger move. You know, what I've noted from all these models is massive divergence, which tells me there's huge uncertainty about the trajectory. What I've concluded from my own modeling is that a fair value range for SoFi over the next 12 months is $32 to $38, based on my assumptions of continued 30 to 35% revenue growth, margin expansion toward 30 to 35% EBITDA margins, and a valuation multiple of 11 times forward sales. Moreover, according to my risk-adjusted calculations, the base case target is around $35, which represents roughly 17% upside from the current level of $29.98. Now, I need to be completely honest about the risks, because no stock is without them. From my risk analysis, here's what concerns me. First, the recent price action shows extreme volatility with a 4.5% intraday range. According to my assessment, this kind of volatility will shake out weak hands and create painful drawdowns. Second, lower volume on rising prices creates technical divergence that could signal a reversal. Third, the stock has fallen 13.4% from the October 28th pivot top, suggesting the correction might not be over. From a fundamental standpoint, what I've been watching is the competitive landscape. Traditional banks are investing heavily in digital capabilities, and other fintechs are expanding their product suites. Moreover, credit risk remains a concern if the economy weakens, though SoFi's high-quality borrowers with average income of $157,000 provide some buffer. Execution risk on new initiatives like crypto, blockchain, and AI products could disappoint if adoption is slow. Alright, so let me bring everything together into my investment thesis based on all the research I've done. From my analysis, SoFi is a high-quality fintech executing at an exceptionally high level. The Q3 results demonstrated explosive member growth, accelerating product additions, expanding margins, and consistent profitability. The transformation from lending focus to fee-based revenue creates a more valuable, capital-light business model. Management has repeatedly beaten their own guidance and market expectations, building credibility with investors. Moreover, according to what I've been studying, multiple growth catalysts lie ahead. The crypto product launch by year end could drive significant engagement. The home loan business growing 93% could accelerate if rates fall. The potential federal student loan privatization opportunity could be massive. And brand awareness at only 9.1% provides a huge runway for growth as more Americans discover SoFi. From my valuation work, the stock trades at 10.3 times sales with 36 to 38% revenue growth and expanding profitability. According to my calculations, that's reasonable to cheap for the quality and growth profile. The technical setup shows support holding at $28.14 with potential for a move back to $32 to $35 if the cup and handle pattern plays out. In my view, the risk reward at current levels around $30 is favorable for patient investors with 3 to 5 year time horizons. So here's my official recommendation. I rate SoFi a buy with a 12-month price target of $35, representing 17% upside from today's level of $29.98. For existing shareholders, I recommend holding your position and potentially adding on any weakness toward $26 to $27. For new investors, current levels around $30 represent a good entry point, though I'd scale in over time given the volatility. Moreover, according to my risk management framework, I would not chase above $32 in the near term without consolidation first. The key catalysts I'm monitoring include the rest of the Monday, November 10th session to see if the rally holds or if we see selling pressure, any news on the crypto product launch timeline, Q4 earnings in late January or early February 2026, and continued margin expansion metrics. From what I've been watching, the stock is at a critical juncture where it either confirms support and moves higher or breaks down and tests the $25 to $26 range. Alright folks, that's my complete analysis on SoFi Technologies as of November 10th, 2025. From everything I've studied, from all the numbers I've crunched, from all the technical and fundamental work I've done, in my view, this company is executing exceptionally well, and the stock offers attractive risk reward for patient investors. The volatility will test your conviction, but the underlying business trajectory is strong. As always, do your own research, understand your risk tolerance, and invest for the long term. Thanks for watching, and I'll see you in the next analysis.